Hello guys and girls and welcome back. It's your boy Big John. The at's at the bottom of the screen if you like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today what I'm going to be talking about is how you can use two free indicators on TradingView in order to find great setups on gold. Just like everything, not every single entry is going to work for you. But if you was to stick to one thing and you continue to do that, I'm sure you're going to be able to find some type of consistency using a strategy like this or many of the others I have on my channel. I hope you're going to like this one, guys and girls. And whilst we're at it, don't forget to get into the one-time VIP group. I'm giving out loads of trades like signal trades. You can see here that the charts, we happened to get some winning trades today. We had some losers as well. But overall, we was about 105 pips or more in profit this week. So you would have been profitable with these types of trades. And there's other things I'm giving out like Zoom calls on Sundays and stuff like that. So please don't forget, check the link above, one-time VIP fee, and we can get this action going. And with all that being said, guys and girls, let's get into the video.
Starting from the bottom like Drake, got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.
Okay, now we're in the video here. I have my split screen mode on in TradingView. So you just want to go to this selection over here. And what I also have on is the 15-minute chart on my left, the 4-hour chart on my right. I have a basic MACD. This is the settings for the MACD over here. This is on default settings. I also have over here is my TDI on the 15-minute chart. Again, these are the basic settings. Nothing has been changed here. And what we're going to do here, let's start with the confluences at first. So the confluences at first when it comes to this whole setup, we're just going to double click this, and the MACD line and the signal line is what is important for us when it comes to trading. So we just want to make sure that the MACD and the signal line is above or below the histogram here. We can see the MACD and the signal line is above the histogram. Then when we see this actually happen, the next thing we're looking for is a 15-minute pullback entry. So when the chart actually came above, right over here, you can see where it happened. We had a crossover of the 2 and 7 moving average on the TDI, the 15-minute chart, and it turned green. As soon as it turned green, I was able to take this trade. On the 4-hour chart, I'm above in a bullish trend. And on the 15-minute chart, as we can see over here, I've now seen that it's given me a higher low pullback entry on the TDI. So my stop loss would have been below this last low, which was here. And then I would have been aiming to take my take profit up to market structure. So we had a level of market structure here and a level up here. Now, averagely, I'm looking for a 1-to-4 risk to reward ratio trade, which was about here in the market, which was great for me. Once the trade goes about 75% into profit, I say take about 75% of your trade off the table. The reason why I say that is because at least then you've banked something and you can let the rest run. As we can see, the rest came up to here. What you want to be doing when it goes 1-to-2 is you want to put yourself in a position where you put a break even here. So remove this stop loss, break even here. So if the market comes back, at least you do not lose money. And the market never came all the way back to your entry here, and it did actually go all the way up to here. So you would have made about a 6.15, taking off 75% of your overall profits and letting the rest run. So now when we go over to the next entry here, we can see that we're still above on the MACD. We can see the signal line and the MACD line is still above in a bullish trajectory. And we can see right now that there was another trade here for a 5.23 setup. Again, a very beautiful trade setup for you to make your risk to reward. So this is something we have to pay attention to here. As we're getting closer here, we can see that the MACD is about to cross over. Even though it's above on the histogram, we can still see that we're getting a crossover for possibly a 4-hour pullback. So now what we're paying attention to over here is, are we going to see something like that obviously occurring, which we would do on the 15-minute chart. Now, we would not have entered this because we can see that the MACD has crossed over, telling us it's not safe yet on the 4-hour chart. We want the 4-hour time frame to be going bullish again. So we didn't get another crossover into this period over here. So let's just go over there. And you see when we did get that crossover there, then when we got our first pullback entry was just here. And again, this was a 1-to-4 hour trade. But we can see that again, if we was to take 75% off this trade, let's just zoom out on the 4-hour chart and look to see where we can see structure to the left. So we had structure here, pretty much where our 1-to-4 trade was. And we had some more structure here. And if the structure was going to keep buying the trade, then we could see there was more here and more up here. So let's see where this actually did stop. So realistically, we could have held this trade with our 25% of profits running after the 1-to-4 for a 1-to-28 hour trade. This is how you're going to get fantastic trades off of this as well, people. So even if you do occur a set of losses, remember there's always going to be that one breakout trade. When you take your 75% of the profits off the table, you'd be able to let 25% of the profits run and you will make quite a bit of money. So now when we're in this seller's market at the moment, we can see that the MACD and the signal line line has gone below on the 4-hour chart, and we're looking for our 15-minute re-entries. We can see we did have one here, which gave us 1 to 2 risk to reward ratio, and this more than likely would have been a break-even trade because you would have moved your stop loss to break even. But then when we come over towards here, we can see this would have been a losing trade. So you would have lost one trade here, you would have lost this trade here, you would have lost another trade over here, and then you would have lost this trade here. So you would have lost 1, 2, 3, 4 trades in a row. Break even and 4 losses. This can happen, and this is what I'm trying to tell you. I'm not trying to cherry pick trades or say this is a perfect trading strategy. Just like any strategy, as long as you trade it over a period of time, you're going to have your big winners and you're going to have your losers in a row, and you're going to have your winners and losers. This is how it goes. You have to let your risk to reward play out. So when it came to this trade over here, we would have been looking for a overall take profit of around this level here. You can see there was a breakout and a level of support here for the market to keep buying from that level. So we would have been looking for some type of overall TP from here. But of course, we just want to make sure at first we get our 1 to 4 trade, which it hit that with flying colors around this area. And then we would have let 25% of our trade run all the way down to our overall take profit. And we definitely would have come out of this trade at this point here when we've seen that the market has crossed over right over there. So we would have definitely been out of this trade and not been spiked back up like here. So we would have made around about a 17R trade. Again, we would have been out of this trade because we can see over here on the 4-hour chart that the MACD crossed over even though it's in a bearish trend. And then we have another one when we come over here. You can see in the 4-hour chart, what we actually did is we had a crossover again with the MACD and the signal line. And then we had a 15-minute pullback entry. First one came in here. So we would have got in from here. Why was my stop loss above this level? Even though we had this massive spike down here, we had a lower high formed here. So we would have seen that this was the highest point, as price action took a while before it got down into the 4-hour trend bearish momentum. And we would have had our stop losses above this level here, which is 1709. Right there, we would have been looking for a sell. So guys and girls, you can see how this works out. And if you want me to give you a bit more of an advanced version of this, where I can show you how you can stack trades and things like that, then please make sure this video gets 50 likes. Don't forget to comment as well. I'm not seeing a lot of comments on these videos now, guys and girls. I'm putting a lot of work into this and going around and making sure that I'm checking these things are working and they're viable ideas you can use in terms of strategies in the market. Please don't forget to like, comment, share, subscribe. It's your boy Big John, and I'm out. Peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.